Welcome in everyone. As always, it is a blessing to be here. Before we get into it, if you've been watching this channel and you're getting value, drop a like, leave a comment with your XRP price target for Q3. And if you are not subscribed yet, do that now and hit the bell, because what I'm going to show you today is exactly the kind of setup that has people looking back 6 months from now saying I should have paid attention. Today is June 26th, 2026. XRP is at $1.02.6, down 4.38% in the last 24 hours. The entire market is in extreme fear and greed index sitting at 13. Bitcoin is at $59,215, down 3.26. Ethereum just got hit hardest at 5.47% down, and XRP, the asset everyone loves to dismiss, is holding still above $1. And I want to show you why that's the most important thing happening in crypto right now, because most people are going to look at the red and miss the signal. Let me pull up CoinMarketCap right now and give you the full market picture before I break down what I'm actually watching. Total crypto market cap, $2.14 trillion. Bitcoin dominance, 55.9%. Fear and greed, 13. That's extreme fear. And that number matters more than any price level right now. I'll tell you exactly why in a moment, but first understand this. When the index hits 13, you are historically at or near the bottom of a correction, not at the start of a crash. The media will tell you otherwise. The headlines will scream, but the chart doesn't lie. Now here's what people are getting completely wrong about today's XRP price action. Overnight, XRP wicked down to 99.8 cents. On some exchanges, we touched below $1. And then what happened? We bought right back up. You know what that's called? Absorption. That's not a failed support. That's big money catching every dollar of sell pressure that panicking retail threw at that level. I've seen this pattern. In 2017, before the December run, XRP held 81 cents through a shakeout that had everyone calling it dead. In 2021, before the October breakout, it held 90 cents while Bitcoin sat at range lows. Both times the pattern looked like this. Price dips below key psychological support on low volume, wicks back immediately, and everyone who sold wonders what happened 2 weeks later. That's the shakeout. That's what's happening right now. The question is not whether you see it, it's whether you do anything about it. Let me pull up this article from crypto.news, and this just came out. David Schwartz, Ripple's chief technology officer, responded directly to community questions about XRP's origins and clarified the timeline of the XRP ledger versus Bitcoin. Scroll down to the section that actually matters. Schwartz reaffirmed that XRP ledger was built specifically for payments and settlement infrastructure, not for speculation, not to be digital gold, built for money movement at institutional scale. And I want you to sit with that for a second, because every time the price dips and the panic hits, people forget what this thing was designed to do. We are heading into the second half of 2026 with ISO 2022 banking rails going fully live globally. The infrastructure that XRP was built to service is being deployed right now, not in theory, in practice. Banks are connecting, contracts are being signed, and the asset at the center of those rails is sitting at $1.02 because retail is scared of a 13 on the fear and greed index. That's the opportunity. Now let me show you the key technical levels, because this is where I spend most of my time. There's an article from Crypto Potato. What are XRP's most important levels after the crash to $1? Critical support at 97 cents. That's the April 2026 low. Resistance at $1.12 and $1.25. And they pointed out something important. The volume on this drop was 30% lower than the volume on the rally from 80 cents to 165 in May. Low volume drops and extreme fear. That's the textbook description of a final flush, not the beginning of a sustained downtrend, the bottom of a correction. And when you combine low volume with a fear and greed at 13, with an asset holding above $1 after absorbing a wick below that level, that's the setup. Not a guarantee, but the setup. The broader context matters here too. Look at the ISO 2022 basket alongside XRP today. XLM, HEDAH Raw, Algorand, IOTA. All of them are down, all of them getting hit with the same risk-off sentiment. But look at the relative performance. XRP is outperforming Ethereum on a down day. XRP is outperforming the broader altcoin market. When the compliance-ready, institutionally positioned assets outperform the speculative ones in a risk-off environment, that's not a coincidence. That's capital rotation in slow motion. The money that matters isn't leaving XRP, it's waiting at these levels, and it will buy the next breakout harder than retail can even imagine. Let me give you the Bitcoin macro picture because this directly connects to XRP, and I need you to understand the relationship. Bitcoin is at $59,215, down 3.26%. We are sitting on a critical support zone that has held since March. If Bitcoin loses 58,000, we could see a cascade down to 54,000 fairly quickly. And in that environment, XRP would test 97 cents or lower regardless of fundamentals. That's the honest risk, but if Bitcoin holds here and reclaims 61,000, the setup for a summer rally back towards 70 is intact. And here's the historical pattern that I keep coming back to. Every time Bitcoin consolidated in this type of range and then broke out 2017, 2021, 2023, XRP outperformed on the move, not slightly, substantially. 2 weeks before Bitcoin hit new highs in October 2021, XRP was sitting between 90 cents and $1.10. Sound familiar? I know it does. Let me walk through the XRP technical levels specifically so you know exactly what I'm watching. Daily chart. Support at $1 right now, then 97 cents, then 93 cents, which is the 200-day moving average. We have not closed below the 200-day moving average since February. That line is the definition of a bull market structure. As long as we're above it, the macro uptrend is intact regardless of short-term noise. Resistance coming up, 112 is the first real ceiling. Get through that with volume and 125 becomes the target. Break 125 and we're talking about a move back to 150. On the weekly time frame, we have a massive bull flag that's been forming for 6 weeks. The flagpole ran from 80 cents in April to 165 in May. Measured move on a clean breakout from this flag projects $2.10. I'm not telling you that happens next week. I'm telling you the structure is there and it doesn't form by accident. Volume tells you the real story, and right now volume is saying what I've been saying. The drop from 165 to $1 happened on 30% less volume than the rally up. That is textbook distribution at the top and accumulation at the bottom. Retail is scared and throwing coins at panic prices. Institutions are catching every single one, and the on-chain data confirms it. In the last 72 hours, 3 major wallet addresses, each holding over 50 million XRP, moved tokens off exchanges and into cold storage. Exchange reserves for XRP just hit a 2-year low. Tokens are leaving Binance, Coinbase, Kraken, moving into custody and institutional wallets. When supply exits exchanges in extreme fear, sell pressure decreases. And when sell pressure decreases at a key support level, the next move up happens faster and harder than anyone expected. The ETF narrative is something I want to be very clear about because I think the market has not priced in what's coming. We know Bitcoin ETF happened. We know Ethereum ETF happened. Grayscale has already filed preliminary paperwork for an XRP product. Bitwise has been signaling it for months. And the moment that XRP ETF approval gets confirmed, whenever that happens, whether it's Q4 this year or Q1 2027, we will see the same behavior we saw with Bitcoin in the 6 months leading up to January 2024. The front run, the quiet positioning, the institutional accumulation before the announcement, that means the smart money that understands this is building right now. Not when the SEC approves it, not when it's on Bloomberg, right now in June 2026. While fear and greed is at 13 and every retail investor is posting worried threads on crypto Twitter. That's how every single one of these cycles has worked. By the anticipation, not the announcement. Let me pull up this headline from CoinDesk. Bitcoin ETFs just posted June's biggest daily outflows as BTC falls below 60,000. And right here it confirms on June 25th, Bitcoin ETFs saw outflows of over $300 million, the largest single day exit this month. Now the casual observer reads that and panics. Here's what I actually see. Scroll down on the article notes. This is institutional rebalancing, not panic selling. Every June, the major funds reset their Q3 capital allocations. And if you look at what happened after the June rebalance last year, aggressive re-entry in July and August. That's the pattern. Outflows now, re-entry in Q3. And when those funds come back in, and they will come back in, XRP, which still has no ETF product and has been completely overlooked by that allocation cycle, is going to be in line for flows that dwarf what Bitcoin got. That's not optimism. That's just math. Look at the AUM these firms manage. Now the macro picture. Nasdaq down 0.46. Nikkei dropped 4.15% overnight. Crude oil down 3.36. Gold up 0.84. Classic risk off. Money rotating out of growth assets and into safe havens. And here's the thing the market has not figured out yet about XRP. It is no longer just a risk-on asset. It's becoming bridge infrastructure. Banks need XRP to move value when traditional rails are too slow or too expensive. Tightening global liquidity actually increases that demand. It doesn't decrease it, so in the short term, we trade correlated to risk sentiment. In the long term, the thesis gets stronger the more the traditional financial system needs efficiency. The market is pricing XRP like a speculative token. The banks connecting to it are pricing it like infrastructure. One of those perspectives wins eventually. I know which one I'm betting on. Compare XRP to Solana today, the only major crypto in the green, up 0.59%. Why is Solana holding? Real utility, real daily active users, real transaction volume, and my point is this, XRP has more real-world institutional deployment than Solana, more bank partnerships, more regulatory clarity. The difference is Solana gets press coverage and XRP gets written off. That gap between narrative and reality is where the opportunity lives. Here is the honest bear case, because I always want to give you both sides. If Bitcoin loses 58,000, XRP tests 90 cents, possibly lower. The macro correlation is still strong. We are not decoupled from Bitcoin yet, and the global regulatory environment is tightening. Binance just announced they are pulling out of EU markets after failing to secure a MiCA license. Ripple is not Binance. XRP has more regulatory clarity in the United States than any other non-Bitcoin asset. But if major exchanges can no longer operate in key global markets, crypto liquidity shrinks across the board, XRP included. That's a real headwind, and I'm not going to pretend it isn't. The bear case is real. It's just not the most probable scenario from where I'm sitting. So here's how I actually see this playing out. Base case, we chop between 97 cents and 112 for the next 2 to 4 weeks. Bitcoin range bounds between 58 and 63,000. The weak hands shake out, the structure matures. And then in late July or early August, we break out. In that scenario, XRP hits 135 to 150 by September. If Bitcoin surprises to the upside and reclaims 61,000 this week, I shift that timeline forward. 150 to 175 by mid-July, driven by momentum and early ETF narrative building. Bear case. Bitcoin cracks 58,000, XRP flushes to 90 cents or 87 cents. And in that scenario, I'm not worried because 87 cents would be a 30% correction from the May high. In every previous bull market, XRP has never sustained a drop deeper than 35% without it being the final low. So even in that case, I'm a buyer, not a seller. The line I'm watching every single day is $1 on the downside and $1.12 on the upside. Inside that range, I'm patient. Outside it, with real conviction, I'm adjusting. One more practical note, I keep my XRP in cold storage, not on an exchange. Ledger link is in the description if you want the one I personally use. In a tightening regulatory environment, exchange risk is real. This isn't a catchphrase. If an exchange gets hit with a regulatory action, users who held their coins on that platform find out what that means the hard way. Not your keys, not your coins. Make it a habit. Now let me close with the two assets most channels aren't talking about today. XPR, network. Proton, down 5.69%. Outside the top 100 by market cap, completely off the radar for most of crypto. But what most people don't know is that Proton is built by the same team that was behind early blockchain payment infrastructure. Human-readable wallet addresses, fiat to crypto with near-instant settlement, compliance built directly into the protocol. It's solving the same problem XRP solves for banks, but at the consumer payments layer. And the market has a consistent habit of ignoring infrastructure projects until they've already moved 300% and everyone's looking for a re-entry. I'm not giving you a price target on XPR. I'm pointing out the thesis, and the thesis fits the same cycle thesis I'm building around XRP. Real payments, real utility, no cartoon logo, and XLM and HBAR are in that same category. Boring to retail, interesting to governments and enterprises and central banks. That's the profile that wins in a regulatory tightening cycle. Not the meme coins, not the yield farms, the assets that solve real problems with real infrastructure partners behind them. Here's the one thing I want you to take away from today. The bottom of a cycle is not announced. You don't get a headline that says it's safe to buy now. What you get is fear and greed at 13. Red days that look exactly like the days before. Headlines screaming about crashes. That's what the bottom looks like. And the people who have the patience to hold through that, better yet, the people who have the conviction to add through it, are the exact people who look back at this chart in 2027 and say, that was obvious. 3 cycles in, I can tell you it only feels obvious in hindsight. And the moment it feels exactly like this, if today added value, smash that like button, drop your Q3 price target in the comments, subscribe if you haven't yet, and ring that bell. New content every single day. As always, it is a blessing. I'll see you tomorrow.